Today, Bitcoin goes on a wild ride amid reports that Genesis could go bankrupt any minute. Speaking of corporate meltdowns, Crypto World catches you up on all the downsizing and restructuring hitting crypto businesses. And Rob Frasca of COSIMO Ventures discusses where VC firms are still looking for investment opportunities in the crypto bear market. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Cryptocurrencies bouncing wildly this morning as investors brace for another potential bankruptcy. Bloomberg reports that Genesis could file for bankruptcy as early as this week. That's bad news for Digital Currency Group especially. At the same time, though, FTX could be making a comeback. In an interview with the Wall Street Journal, the bankrupt exchange's new CEO says a task force is exploring a revival of the business after bankruptcy proceedings wrap up. Investors are trying to make sense of all of this, in addition to concerns the Fed will keep raising rates despite signs of slowing inflation. Most cryptocurrencies were down earlier this morning. By noon Eastern, though, they staged a comeback. Bitcoin traded just below $21,000, Ether traded around $1,500, and Solana reached $21. All right, with the collapse of FTX sending shockwaves through the ecosystem, dozens of companies have been forced to right-size their own businesses, or in worst-case scenarios, file for bankruptcy themselves. So we want to take a second and catch you up on some of the shakeups in the industry.
FTX kicked off 2022 with a $32 billion valuation, hiring celebrities for Super Bowl ads and plastering its name on the arena where the Miami Heat play. The crypto exchange positions itself as the gold standard, trying to save other crypto firms amid market turbulence last year, but all that came crashing down when FTX itself needed saving. Sam Bankman-Fried's crypto exchange filed for bankruptcy protection in the U.S. on November 11th after facing a liquidity crunch. Contagion quickly spread across the crypto industry. About 2 weeks after FTX, its sister hedge fund Alameda Research, and dozens of other subsidiary companies went bust, crypto lender BlockFi announced it was also filing for bankruptcy protection. And just a few days after FTX filed for bankruptcy, the lending arm of the crypto investment bank Genesis Global Trading froze redemptions. Genesis was a major client of FTX and was hit hard by its collapse. The interim CEO said FTX's dramatic fall sparked withdrawal requests that exceeded the company's liquidity. That same morning, crypto exchange Gemini said it was pausing withdrawals on its interest-bearing earn accounts as a result of the Genesis move. Genesis is the lending partner for that program. Fast forward to January 2023, Genesis said it would lay off 30% of its workforce as the company tries to stave off bankruptcy. Silvergate Capital said that it faced more than $8 billion in withdrawals in the fourth quarter as investors spooked by the FTX collapse pulled out funds. The crypto-focused bank said it would cut its workforce by 40% to try and curb costs. And Coinbase is cutting a fifth of its workforce, with the exchange's CEO blaming the FTX collapse and the resulting contagion, which he says, quote, has created a black eye for the industry. Last month, crypto lender Amber told employees it scrapped bonuses in 2022 as the turmoil from the fall of FTX raged on. That's according to Bloomberg, which cited an internal memo. Some managers reportedly agreed to give up all or part of their salaries amid the downturn, and the company plans to cut its workforce to less than 400 employees from more than 1,000 earlier in the year. 3 weeks after FTX's implosion, Kraken laid off more than 1,000 employees. That's about 30% of all staff at the world's third largest crypto exchange by volume. Kraken co-founder Jesse Powell said the move was a reaction to current market conditions. And less than a week after bigger rival Kraken cut its workforce, crypto exchanges Bybit and SwiftX also announced layoffs. Both Bybit and SwiftX blamed the staff reductions on the crypto downturn caused by the FTX collapse.
Okay, on to our main story. As the crypto winter lingers, some industry insiders see this time as an opportunity to build, and that includes venture capitalists. Crypto World's Talia Kaplan spoke with the founder and managing partner of VC firm COSIMO Ventures about his blockchain-focused funds and his outlook for digital assets.
You created a blockchain-focused venture fund with the goal of building what you say is the next wave of the internet. I'm going to ask you about that fund in a bit, but first take us through your extensive career in tech that has spanned about 30 years. Can you talk about your experience and what ultimately led you to blockchain technology?
I was at Carnegie Mellon, and I started the very first financial service on the internet. This is in 1993, first stock quote server, first mutual fund site. When I was 29 years old, it was acquired by Intuit. And ever since then, some 30 years later, I've done a bunch of other companies, one in the AI space, sold it to Lycos, did another one, sold it to Nielsen. So I've been a serial entrepreneur in tech. And back in 2014, being a dot-com guy, being a tech guy, I saw blockchain emerge primarily through Bitcoin. And when I saw it, I immediately realized, holy cow, this is kind of that settlement layer, that decentralized settlement layer, transaction layer that the internet needs. So one of the things I say all the time is I really believe, we believe that blockchain is the largest value creation event in our lifetime. And I was fortunate to be an entrepreneur during .com and in the mobile phase. And I think blockchain's even bigger than that.
So back to your fund. Can you talk to us about that fund, COSIMO X? What kind of startups are part of the funds and what compelled you to invest in those companies to begin with?
Yeah, so first of all, our fund itself is tokenized. We're one of the first funds out there to be tokenized. So we're not the traditional venture fund that's got a 10-year lockup, where you're investing over time, over that 10 years. We actually decided to tokenize the fund. You may have seen in the press, right? State Street Bank talking about tokenization. Larry Fink at BlackRock, CEO of BlackRock, saying tokenization is the future. KKR just tokenized the sleeve of their healthcare fund. So we believe tokenization is really the future of the finance world using blockchain. And our fund itself are early stage investors. So what we do is we get involved very early, generally at the seed stage, a little bit past seed stage, and we're really investing in the infrastructure, the realization of using blockchain into the market. And we invest in all types of businesses. We have some 30 investments in the fund. We're small, but we're growing. It's tokenization, so you're always bringing more money and doing more investments into the fund.
So in general, what do you specifically look for when choosing a startup to invest in? What signals to you that a business has long-term growth potential?
Yeah, so ultimately we broke the market down into several different areas. Otherwise, there's so much going on. It's really hard to organize it. Everything from kind of the early infrastructure of blockchain. These are the actual protocols themselves. We then look at a lot of the infrastructure and the tooling. We look at Web3 businesses, which are using blockchain to kind of reimagine the internet and web. And then we actually look at the various financial systems as well. As always, we're always looking at the entrepreneur, what their experience is, the team, the founding team. We look for market traction, whether or not they have it, where are they, how unique the technology is. And one of the things in this market that we've seen is that there are so many investors in the space that we look at the quality of kind of the network or the syndication of investors that are actually in a deal.
Did the collapse of FTX, the other scandals that plagued the industry last year, and the crypto winter cause you to perhaps shift your investment strategy at all? As a venture capitalist in the space, how has that backdrop impacted you and your investments?
Yeah, look, it's unfortunate that it happened. What it does is it puts a lot of fear in the market. When you really look at what happened, it had nothing to do with blockchain. It had everything to do with fraud. And that's unfortunate. It's not unusual when you have an early speculative market to get, craziness in the space. So I feel like the FTX is really a good thing in the sense that it's horrible. But I think what it does is it renews a look into regulation and compliance, which I think is critical in the market. It's just like the early days of the internet. Exactly. In fact, my partners and I, we're all .com guys. So we always say, man, we've seen this movie before. One of the things that I always kind of come back to is you got to look at the underlying value of the tech. Do you believe that blockchain is really, truly going to revolutionize the world? And, the old Warren Buffett quote, right? Be greedy when others are fearful and be fearful when others are greedy. I think you got to really take that to heart. We're moving from this, I say, speculative phase or speculation to realization. And that's an exciting time to be an investor, certainly on the venture side, because now what you've got is bigger institutions coming in, technology adoption, using the technology, and ultimately that's where you get the alpha, where you get the growth at scale that we'll see.
So you just touched on this, but I read your COSIMO Advisor byline where you argue that the FTX collapse has the potential to accelerate meaningful regulation in the digital asset industry. You also argue that regulation would, quote, be a boon for the industry, while some other people I've spoken with worry that it could potentially stifle innovation. Can you explain why you believe regulation is key?
So ultimately, investing is about risk and risk mitigation. And I kind of like to use the analogy of driving down a mountain road. You're not going to drive down a mountain road if there are no guardrails. You're certainly not going to do it fast. Okay. Whereas when you put the guardrails up, you're going to feel a lot more comfortable with that road, and you're going to be able to drive down it faster and get to where you're going. I kind of think of regulation in the terms of crypto and blockchain in the same way. Right now, without regulation, there's too much risk for a lot of people. They're risk off. They're not in the market. They won't invest in the market. Liquidity is kind of pulled back. Fear has taken over. As regulation comes in, what it does is it reduces the risk. It makes people more comfortable with the market. It frees up liquidity into the market, and it gets more people adopting the tech. So I do think that with the right regulation, and the operative word is right, okay, we don't want to see crazy, stupid regulation that doesn't make sense. If we have really good informed regulation and people are in compliance with that, what it'll do is it'll give more people comfort with the market.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.